Welcome to Business FM. We're broadcasting from my radio studio at FMR 101.3 FM at the Artscape Theatre at the Foreshore in Cape Town. And looking back at the week that's almost concluded with me this evening is Jacques Botha, Chief Economist at Afriforesight, and also Izak Odendaal, who's an investment strategist at Old Mutual Wealth. Gentlemen, a year ago, the all-share index of the JSE peaked, I think, at 55,188. It's been down to 47,000. I think that was in January. And now we're back almost one day this week, got to 54,000 intraday, I think it was. So we've sort of gone flat for a year. I think it's all to do with commodities, and that's where you come in, first of all, Jacques. We're going to have an in-depth analysis of what's happening in the commodities markets. But briefly, it's amazing what's happened.
Yeah. Well, we anticipated that, as you know. Lindsay, the big story is that the markets are now the miners have now the weak miners have fallen out. So it was an oversupply story which pushed prices down. Now suddenly the suppliers there aren't enough supplies in many commodities, and prices can go up again. So that's really the short of the story.
Is it I mean, do you get this sense, Izak, that perhaps because of the lack of investment over the last few years in the mining industry, in other words, there's no new supply coming on in the next 2 to 3 years, that we could actually get a shortage and we could get a squeeze on certain commodities, a backwardation. In other words, the spot price is becoming more expensive than the future months' prices, and shares like Anglo-American, which has already gone from 50 to 150, let's call it that, and they could go even further, because I'm getting a sense there's a bit of panic out there from buyers, that is.
Yeah, I think you need to separate the financial assets from the real assets, from the actual physical commodities. I don't think we're at risk of running out of the physical stuff anytime soon. I think you're quite right. When you go through a cycle, there typically is at the end of that cycle underinvestment, which then paves the way for the next leg of the cycle, which is a shortage.
And of course, we think this is new, don't we? But of course, it's been going on.
This is age old.
Yeah.
I mean, in agriculture, it probably goes back hundreds, if not thousands, of years. But in the financial sense, things get oversold very quickly. So the share price of the commodity players can get really hammered. And then you have all these momentum trades and these hedge funds, and they're short selling, and then all you need is a slight improvement in sentiment, or a slight improvement in whatever model that you were basing your analysis on, and the thing can snap back viciously, which is pretty much what you've seen with a lot of these shares. I mean, look at the gold shares. I mean, they've doubled,
tripled. Look at Kumba Iron Ore. Let's bring you in on this one, Jacques. How long ago was it that I hosted an excellent conference that you were the sponsors of at the Balalaika Hotel in Sandton in Johannesburg? And I can't remember the name of the conference, but anyway, you were saying that this is the low. You were slightly too early, but goodness me, since then...
Well, we call the conference the bottom. We were naughty. We changed the name. We wanted to say the bottom line, but as we saw the bottom actually approaching, we changed the name to the bottom in the last minute. Yeah. It was in September, but we in the conference, give us credit, we said from the end of the year onwards, the bottom starting with the different commodities.
And that's what happened.
That's what happened, yeah.
I'm trying to sort of point to a couple of incidents that might have been the catalyst for this rally, and I think it was companies like Glencore saying we're going to reduce our zinc output by 400,000 tonnes a year or something, and you that sticks in my mind. The shale gas and the shale oil producers in the United States being knocked out because the oil price is below $30 a barrel, but also cutbacks from people like Glencore. That was it for me. That was the end of the supply glut.
Yeah, and I think, as Izak said, it was a sort of also the perception in the market was more. But physically, there were quite a few commodities that were literally run out of supply because the mines have just closed down. There were parts like in Congo, the copper producers, just like Glencore, but other people also closed down there. So some of the commodities, the guys actually closed down production. But there was also but the big thing here is that there wasn't a demand lift, a strong lift. So this is the challenge now, because we see the global growth just slowing. I don't know what you think. There's still to be a global growth, but everybody talks about a slow global growth. There's nothing different. This is just a very slow. So there's not going to be a strong jump in demand now. So this sort of slingshot change is also very much a sort of an oversold now, maybe going back. Now it's maybe an overbuying situation. So there is a risk on that. So get the timing. Every commodity, of course, has its own cycle. There are some commodities that is still an oversupply of. but the prices hasn't shown that. Like iron ore and manganese, they also have gone up. Okay, and
well, iron ore has gone to what from 35 to 70. I think $71 per ton yesterday. I saw, and Kumba iron ore has gone from 26 rand a share to 122 rand a share again yesterday. This to me is incredible stuff. Someone's been burnt on the short side, and are there new players coming into the market? I mean, Old Mutual Wealth, for example, have you been buying? You can tell us.
No one that I know is particularly buying Kumba. I think the funny thing there is that in the iron ore market specifically, there's this expectation that China, because the Chinese growth numbers have bottomed out and Chinese investment spending is increasing and Chinese steel prices have increased, that as a result, the iron ore prices has jumped, which seems silly to me, because the Chinese have said we've got an oversupply of steel, we need to cut down steel production. So the fact that the steel prices have increased in the short term, I think the longer term story still there is an oversupply of steel. And
they said over the next 5 years, I think that they're going to lay off X number of workers in the steel industry. I think it was a number that was 7 figures. I think it was 1 million workers. It could be more, but I mean, it's not something that they haven't done before. I mean, various cycles. The Chinese are very good at that. You know, a state-run company, they say, right, we're going to cut 1 million jobs. You couldn't do that in South Africa, but they do it there.
The Chinese have actually been very naughty. They've been playing with the markets, really playing with the markets this year.
Trading the markets.
They were playing. I don't know. I'm sure as well. They've been deceiving. I mean, the last 5 years, their major strategy was to say this is going to be rebalancing of the economy to a consumer demand economy. Now, only now, but we already said that, we warned, we could see it in the markets, that's not happening. The economy is not shifting to a consumer economy. It went, I think, from 37% to 43%. The shift. It's still very much the sort of the middle income trap is still sort of stuck in the Chinese economy. So they had to, now they are announced after their big jamboree about 3 weeks ago, they had a session with some very, very world-renowned economists like Stephen Roach that's now an academic, also gone back to the academia.
Yes.
And he wrote a very interesting article. I don't know if you guys have seen that.
No.
Where they've now admitted that they've changed their goals now. Their goals are now to rebalance the economy is only number 3 on the goal path. And where it's now just sorting out this economy, making money wherever we can, not even worrying about pollution, nothing is number 1. And this is what they've been doing this year.
So the rebalancing of the economy from an export-led economy to a internal demand-led economy, that's out the window now.
Well, basically, they're scared of the growth slowdown. They're scared of the implications if growth slows too much. So they're trying to get the growth rate back up, or at least stabilize the growth rate around 7%. The only way they know how to do that is to crank up investment spending, to build blocks of flats, to get the sort of the traditional growth mechanisms going.
And what they're not even admitting, I think they're also doing it by exports again. They're just doing it by stealth. They're actually weakening their currency very carefully. Nobody's noticed.
Didn't we see some good trade numbers on that very note? And everyone said, "Well, this is fantastic because they're exporting more." And I said to myself, "Well, wait a second. They don't want to export more. They want to import more."
But they haven't admitted that part yet.
No.
It was a bit
sounds a little bit dubious. I mean, it doesn't sound like a bubble. It doesn't sound like a disastrous situation, but it does sound as though that the markets are interpreting data as they wish to interpret it. In other words, if they want the market to go up, then they say that's good. If they want it to go down, they say it's bad.
Well, I mean, Maurice Opsveld, who's the chief economist at the IMF, kind of summarized it quite nicely. He basically said, look, we're upgrading our outlook for China in the short term because we think all the fiscal monetary stimulus is going to work. But we're downgrading our long-term outlook because you are not addressing the real challenges in the economy. You are not rebalancing by kind of trying to boost the economy in the short term. And I think that's pretty much where we are with China. It's they're kicking the can down the road, so it's next year's problem or the year after's problem.
Yeah, it's difficult to analyse the Chinese situation.
I totally agree with that.
Yeah.
Summary there. We also long term. I think China's not going to make this. Well, they're not being. We don't think they're really making it. This target that they have, but they're not going to make their target. If they drop their target to 4% or something, I think suddenly people will start believing China again. And that's why I think their stock market is also a bit precarious at this stage.
Well, it's really not something that we should worry about. We should worry more about the JSE Securities Exchange. But
so that's a good point. I mean, so yeah, we do have to worry about NASDAQ. But the other question is China going? If China keeps growing, is that going to suck up all these commodities that we produce in South Africa? And I think the answer there is no. We're not going to see the kind of commodity super cycle led by China again. Period. So if there's going to be another super cycle, it's going to be the Indian cycle, which is maybe a decade or two out.
But someone's telling us that there's two ways to look at this. I mean, I keep on using Anglo-American PLC, and I'm sorry to keep on boring on about Anglos, but it's a great example. It was 539 rand a share in what year? 2009, was it? 2009?
You've got a better memory, I don't know.
Probably. Let's call it 2009. It came down to 52, 53 rand a share on January the 23rd of this year. So it was overbought at 500 plus. It was sort of oversold rather at 52, 53. And now it's bounced back by 3 times. And everyone says, that's amazing. It's gone to 160 rand a share, but it's still come from 539. So is this just a rebalancing? Is this just a short covering equilibrium exercise, or is there definitely something going on? I can't ignore the fact that the share that used to be the biggest on the JSE and was the most important company in South Africa has tripled in price in 3 months. Is it the real thing, or is it just a correction and it will now go sideways or drift lower? I mean, Izak, you're not buying the thing because you've told us you didn't tell us, but I sense you don't like the Anglo-American stable.
No, it's not that. I think basically, no one really knows where it's going to go. I mean, the other thing about Anglo is they're restructuring. So the company that's going to end up in a year's or so's time is not going to be the company that was worth 500 rand 7 years ago, because they're now really cutting down and going to focus on these core commodities. The fact is just people got completely carried away, both from the upside and the downside, and hopefully we're now closer to what the real value is. I mean, that's ultimately the thing. There's a difference between a price and a value. And the price is whatever the market says on the day, and the value is something that sort of shows up over time.
150, is that the price?
Anglo is a complicated company. Other than it's not a typical commodity company. We've got 2 things that stand out: diamonds and platinum. So you've got to have a strong view. You've got to have a specific.
So it's got diamonds, platinum, and copper now. That's what it wants.
Yeah,
those 3 pillars. Yeah.
Okay. They want to end up there.
Yeah.
So they are a bit difficult. You've got to make a call on diamonds. I don't know what you guys think. We thought they'll play the game. They were playing the game. De Beers and the Russians, Alrosa, to hold back diamonds like De Beers used to do it, and production, and then let the price lift again.
The site results have been quite good, haven't they? The site results, the diamond site results have been really good.
And then the Russians cheated in the beginning of this year.
Can't believe that.
They said, okay, we are going to produce, but we hold back the production. And then they went on an auction and they sold the diamonds on an auction. Oh. But it seems this time now they've got together with Rio Tinto, and those 3 guys are all now sort of holding back their production. And there's now, for the first time, the big demand, as you guys know, is from America, and there seems to be a lift in the consumer demand in America, and the diamond prices have now lifted.
Which is interesting, because the Chinese have affected Swiss watch exports to the tune, I think, 8.6% full. We'll talk about Swiss watches, we'll talk about diamonds, we'll talk about the South African rand, we'll talk about a couple of SA-specific corporate stories after the break. Business FM will be back in a moment. Welcome back to Business FM. In the studio with me, looking back at the week that's almost concluded, is Jacques Botha, who's the Chief Economist at Afriforesight, and also from Old Mutual Wealth, we've got investment strategist Izak Odendaal. We covered a few things, mostly commodities, before the break. We have to do a little bit more of that, unfortunately. And I have to say that South Africa, don't care what anyone says, and I don't care what anyone says about the euro-dollar exchange rate being currently around about 113, and therefore that's why the rand-dollar exchange rate, or the dollar-rand exchange rate, is strong in favour of the rand. We are diggers of commodities in South Africa. And if you see gold and platinum going up and money coming in to JSE-listed resources stocks, then the rand is strong. It's a long-term correlation. So that is why the rand is at 14.35 and was at 14.18, Jacques Botha. From 17.
Yeah, there's a. First of all, can we? I was involved with some model buildings, building of some models. There is a problem. If the rand is too strong, or too weak. If the rand is too strong,
Yeah.
if the rand's getting stronger, if the rand gets stronger, our miners are battling. We need a weak rand, because our costs are our labour costs and electricity costs. If we get a weak rand, it actually helps us on that side.
We can't rely on the weak rand to boost a sector of the economy that is important, but not as important as it was.
This is the problem. Our mining industry is losing its place in the world. It's as simple as that.
Well, it has been for ages, but we can manage it without the rand, don't you think,
Well,
Izak? I mean, why? If the rand suddenly, if we have a lucky break, according to Jacques, and the rand goes to 18 to the US dollar, 27 against the pound and 20 against the euro, that's a random event. It's nothing to do with us. We must manage, I think, Jacques, and we'll come to this later on, I think we must manage our own destiny, not worry about the rand.
I think, but that's true. I mean, you need to create the environment in your economy where businesses can thrive, and that's clearly not the case in the mining sector. Clearly not the case. Having said that, the rand is a very important adjustment mechanism. So where you are uncompetitive, and this is not just South Africa, this is globally, where you are uncompetitive, if you have a flexible currency that does some of the work, the adjustment work for you. I mean, the classic example is Greece. You know, they're stuck in an exchange rate, and they've had to cut their prices internally by 30% in order to regain some sort of global competitiveness. We've just sat back, and the rand has done the work for us. And all of a sudden, our mines are profitable again. Tourists are coming to Cape Town, and there's a benefit. There's a benefit as long as you're not offsetting the weak rand with high inflation. And so far, it's actually been. I mean, look at this week's numbers. So far, inflation remains under control, despite a massive depreciation over the last 5 years.
Gosh, just on a side note and going off at a tangent, I hope that we don't. I mean, we've spurned and haven't taken advantage of commodity super cycles in the past, Jacques. We've fiddled around a little bit, and we haven't got the most benefit. Please, let's not do that with the tourism industry. I don't know if either of you saw two surveys that have been released in the last month. One from the global publishing giant Condé Nast. Their awards for the best food city in the world went to Cape Town, and the Telegraph in the UK, the Daily Telegraph, its travellers section voted South Africa not the best food city in the world but the best city in the world, and it plastered it all over the newspaper. 22 reasons to go to Cape Town. It's quite extraordinary, and hopefully we don't mess that up as well.
Well, we almost did
with the visas.
With the visas, yeah. But luckily, sense seems to have prevailed. Okay,
let's go back now to the rand and go to purchasing power parity, because the rand was something that you brought up. The rand was 17.91 during the Nenegate affair, came back and actually traded during normal hours at 17 to the US dollar at one stage. It's now, as we speak, 14.35. It has been 14.18. Purchasing power parity for the rand, I was reliably informed on Power Lunch on CNBC Africa today, 10.71. Of course, it never goes to that, but I would estimate 12.50 the rand. No,
the rand's actually, I think, I can see the mining industry, if the rand gets stronger, it's not going to help. That industry is not going to make it.
But do you agree that the rand could go to 12.50? I mean, it was only 6 years ago that the rand was 6.50 or 6.60.
I think there's too much uncertainty. Every newspaper, and you know, our newspapers are sort of protecting the ruling party in many ways. You see
Sunday Times isn't. Well, Sunday Times is anti, I think.
Well, I was actually thinking dailies, but there's a Mail and Guardian that's got also other stories. But anyway, so there's always a story. There's such a lot of the differences in the party. Now I'm talking about an area of the fact that the story that the party has now two parts fighting against one another. And that really impacts on everything, on legislation everywhere, everything that's happening, and regulating of business things, uncertainty. It sort of stops business uncertainty. I don't think it allows people to do things they wouldn't have done normally. I think that uncertainty is going to... It is also sucking business confidence. Nobody's sure about anything. No leader can really stand up. Now you've got, for example, three ministers going to talk to the banks to say, please have this bank account with somebody. I mean, if I know of a German guy that said he's sold his property. When he read that, he phoned me. He said, "Jacques, I'm selling my property in South Africa."
I spoke to a company the other day, and what was its name? And I can't quite remember. It will come back to me. But the person was commenting on the company's annual results, and he said people are selling up. People are selling up from South Africa, and I'm seeing these bargains, and I'm mopping them up. I mean, that was an exaggeration from my point of view, but he said bargains are being had because people are leaving South Africa. International investors are leaving South Africa in droves. I've got to find the name of this person. You carry on, I'll look it up.
I mean, I think the rand story is also relevant there because you've seen the dollar value of your investment really just collapse up until January of this year. So that wouldn't surprise me. I think when it comes to the rand, the questions are what will happen, what do we want, where do we want the rand to be, and where we think the rand is going to end up. So can the rand go to 12? If there's a strong rebound in commodities and emerging market sentiment, and everything else goes, the Brazilian real also goes and the Turkish lira also goes, yes, I think we can get to 12. But I don't think it's likely. It's possible, but it's not likely. Because of some of the reasons that Jacques mentioned.
The rand has the ability to surprise the time.
Yes, and I think the scary thing here, or the problematic thing here, is that from an investment point of view, a lot of investors towards the end of last year, and we see it every single time there's a big cycle, a lot of investors just went out, local investors, overseas. So they just try to chase this rand trend, and if the rand goes back to 12 or to 13, people are going to burn their fingers.
The company was called Consolidated Infrastructure Group, and it was Raoul Gamsu who's the CEO, and I spoke to him, and he said he's very bullish. I mean, their results were fantastic. Other results, and Jacques, you may take a back seat on this one. Clicks came out with results yesterday. We've had trading updates from companies like MTN, and we've had results out from PSG. I know you don't want to talk about PSG, but how is it that Clicks can achieve this extraordinary result?
Yeah, so the death of the consumer appears to be greatly exaggerated.
80% of people that go to Clicks to buy stuff
are
women. 80% of their customer base is women. Does that tell you something?
No.
Doesn't tell me anything.
Does that imply that they're... No. I mean, let's just look at what happened to the Cell CCO.
That was a disaster, a PR disaster. What a stupid thing to say, although it was on a relatively small platform. That small platform has great social media presence. You can't say things like that. It's really, really stupid. But anyway, back to
I think the general point is there's still some life in the SA consumer, despite all the doom and gloom. And we see this in a number of different sources. Secondly, if you run your company well, you can still make money in a tough environment. And also, this is an industry where there's consolidation. They're buying up some of the smaller pharmacies. So it's a good set of results.
It really was.
And I think maybe just one more point. Their inflation rate, and I always look at the retailers to see what their inflation rate is. So their inflation rate is 4.5%, which is not 7% like what the stats number that's reported.
It's not like Mr. Basson at ShopRite, where he can't pass on a 10% increase in a certain staple commodity. Clicks can, because Clicks, for example, their drug prices are administered by the government.
Yeah. But I was going to say the opposite. There's 4%, despite the fact that they have a very large imported component. So if the price is only increasing 4%, and we know that the nominal income growth is in the region of 8%, that means that there's still a bit of purchasing power in the hands of SA consumers.
CPI came out this week. It was 6.3%. It came down from 7% the previous month, and the reason is a base effect because of the fall in the fuel price. People are saying it's going to go back to 7.5% to 8%. I'll nail my colours to the mast now. I was a Rand bull in January, and I've been right. And I'm just going to risk my Rand reputation being shattered now by saying that I think that inflation in South Africa will come down closer to 4.5%, 5% by the end of the year. It won't be up at 7.5%, 8% because of the Rand, because of the lack of demand in the economy, and because the oil price will stabilise at these levels, and the Rand will continue to strengthen. Jacques Botha, you're looking at me quizzically.
It could be a scenario. I think the click story, for example, that's now shows actually, but that's also now there's consumer demand. So there could be a balance of payments now. There could be more inputs, which is sort of going against your story there already. So there is a risk, but I think the capital account is really the risk for the Rand. And I come back to the story. The mines, interesting. I'm trying to work out, but if the rand goes to 12, trying to remember, but the platinum price will have to be at least $4,000 an ounce, something like that.
But it's only 1,035 now.
Yeah. What I'm saying is it's so expensive to mine in South Africa.
Yeah.
So if we have to, it will only be the only mining we can do is where we have control of the price.
Maybe Neil Froneman will bring the cost down.
Well, I've seen the mechanized mining experiments as well. We are leaders in the world on mechanized mining. Even there, it's very expensive to mine. So I'm just saying, I don't want to get stuck. The mining industry won't survive a rand of 12 to 12. Tourism, I think this is how we can go. This is what we really must capitalize on. I'm very excited about tourism in South Africa. I was thinking even Clicks would benefit from tourists. People, the shops around Clicks, all people go and eat there and they all go and buy at Clicks. The owners of those shops go and buy at Clicks, things like that. Yeah. Tourism is really stimulating our economy. But a rand at 12, I'm a bear at this too. I think the rand is actually, and we haven't spoken about the dollar. That's the other story, of course. I think he also would.
Well, we've got 2 minutes to talk, or 1.5 minutes to talk about the dollar. 105 to 115 is the euro-dollar exchange rate. It's currently 113, has been to 114.5 this week. Where's it going to go? I think it's the top of the range, and I think the dollar will start to strengthen from here.
It's a very difficult call. I think most of the dollar strength is behind us. Which is good for the rand. Well, I mean, it means the rand will probably.
So it's going to break out to the top at 115. Jacques Botha?
If you look at the dollar index against all the major other trading partners, for the last year it's been flat. The index was between 94 and 99. It's now about 95. I think the dollar, it's the time now. As the Fed, I think in the next meeting next week, they're going to start warning the markets that we will at some stage increase interest rates. Then the dollar will start going up. So I think the dollar's actually reached the spot.
Is there a chance that my life as a broadcaster is going to be miserable for the next 7 months, 8 months of this year, and for the next 2 to 3 years as the markets play within a range and go sideways? I can't see any reason for the market to shoot up to the upside. I can't at the moment see any reason for the market to come down to the downside, because although the market is slightly expensive, it's not over expensive. Izak, 30 seconds.
There's a very good chance that you're right.
Oh no.
Yeah, there's a very good chance that you're right.
Sideways.
But markets tend not to move sideways. So
yeah, but they'll be ping-ponging between two levels.
Ping-ponging, yeah.
Okay, ping pong.
I agree. Sideways. There was a. I think, and now we're sort of reaching a bit of a. It could go down a bit. This is the first little mini downwards that's heading our way.
Okay.
So in that kind of environment, maybe just one last thing. People need to think about being diversified in their investments.
Exactly.
Yeah.
Jacques, Izak, thanks very much for your time this evening. That's Jacques Botha, the Chief Economist at Afriforesight, and he was joined at the desk looking back with me this week by Izak Odendaal from Old Mutual Wealth, investment strategist at that institution. Business FM will be back same time next week.